back. You're watching Your World at 10. Now, despite the improvement in the global economy over the last few weeks and months, the export picture remains very grim. The Director General of Foreign Trade recently confirmed that exports continue to decline in the month of July and that the outlook remains bleak. On his part, Commerce Minister Anand Sharma has said that more incentives are on their way. So 3 stimulus packages down, how bad is the situation on the ground? Joining us to answer that is Nishad Parekh, the Head of Policy Initiatives at the Arvind Group, and A. Saktivel, the President of the Federation of Indian Export Organizations, or FIO. Well, Mr. Parekh and Mr. Saktivel, thank you very much for joining us on Your World at 10. The numbers, I understand, already tell a better part of the story. In the April to June period, exports registered a negative growth of about 31% in dollar terms and 19 to 20% in rupee terms. Let me start with you, Mr. Saktivel, first. Are you seeing an improvement at all in sentiment right now across the world? Many economists who have joined us on the show say that they believe a recovery is already underway, and some others have said that if not in this quarter, by next quarter at least, the global economy will be in recovery mode. What's your assessment of the demand on ground, Mr. Saktivel?
Yes, I do see some queries started coming from Europe and States for last 1 month, but the main thing is price factor. They talk about prices than the other things. So, but queries have started coming in. It shows that there is some improvement in economy in States as well as in Europe.
Nishad, would you agree with that? Are you seeing an improvement in sentiment? And are you seeing an improvement in actual demand orders?
Yes, I agree with Shaktivel there, and we also see improvement taking place in terms of demand in Europe and US. And there are a couple of reasons to it, because number one, the pipelines were fairly dry, so perhaps some filling up of the pipeline that is taking place. Second, price pressures still continue, and I would say profitability is largely under pressure, where also I agree with Shaktivel. And third point is that we have been able to replace China in some of the cases because of the currency advantage we had temporarily for rupee was a little weaker. And the second was China faced the reverse position on currency as well as the cost escalations there. So I would say it was a temporary gain situation over China. China, I'm told that they have just reacted and offered some incentives, and one need to see what happens in future, meaning whether the demand will be sustained for a longer period or for a medium-term period. That is definitely required to be seen.
Nishad, when will you, I understand that some of these orders may be tentative orders, inquiries, as Mr. Saktivel put it. When can we see it reflected in the numbers, not just for the textile industry, but overall exports? When will these become concrete demands? When will we start seeing, order books filling up? Are you getting any sense of that right now already?
Difficult to estimate that in terms of the time period, but I would say that the momentum has just begun. The drop was significant, and we have actually started, and we believe that it is bottoming out. And if it continues in the medium term, we would say that it would further improve, but difficult to say at this juncture.
All right, Mr. Saktivel, are you seeing this across all kinds of export industries, or are there specific pockets in which you're seeing either a resumption of demand or at least a stabilization of decline?
The thing is, I'm talking about mostly the manufacturing sector, except the auto sector, where sure, we do a big business with the States. Now the General Motors is down. Otherwise, we are finding it, queries are coming in all the manufacturing sectors. But only the gem and jewelry and auto sector is little minus, because it's a very high value item. They are finding it difficulty. And auto sector is down because of General Motors, because our export to States is about $900 million US. So we are down by that. Otherwise, now the queries are there. We have to convert into order, provided the government comes to our support. For the people always say that don't compare China, but we have to compare China because our main competitors are China. Now, for example, if it's a VAT refund, if you take it, they already given 10 packages to the export sector. Now their packages is 15 to 17% VAT refund, whereas we are still with the 7.5 to 7.8. Same way the interest, even after the interest subvention, our interest rate is about 9 to 10.5%, varies from bank to bank, whereas their interest rate is only 4%. So this two factor itself, there is a difference of 11 to 12%. So we are not able to get the prices. So this is where we need the government support to come out to give us a sharp price to the buyers.
All right. Mr. Saktivel, when you say government support, can you expand a little more on what exactly you would expect? Because we do understand that the Commerce Ministry is watching the situation very closely. The previous stimulus packages, like you pointed out, have helped, but maybe not helped entirely. There's very little one can do to actually stimulate demand overseas. So really, specifically, what is it that you're looking for to be able to ride out the next few months till you see, a full and proper resumption in demand, hopefully?
That's all. Ad hoc measures now. We need an increase in drawback by 5% immediately. This requirement of the industry. Then this market development fund, some product we got 1%, some got 1.5%. Instead of that, across the board, it should be increased to 3.5%, so that this market development can be used for our pricing factor. So these two factors are immediately given to us, so we can have some breathing time to get some orders. Then slowly we can pick up the export also.
Naishad, would you agree with that? Because there is one point of view also that says that, you have no option but to ride this out as an export industry and wait till actual demand comes back.
Actually, yes, I would say government intervention would be really useful here, because as I mentioned, two advantages. One was the foreign currency, with increased remittances and export likely to improve in future. This may not be a long-term advantage or even a medium-term advantage. And we do export lots of taxes along with our products. And that's why a rational drawback rate is very essential. Last year we had a 40% cut in the drawback rates, and that has not been restored. So I would say that correction is a must, and that should happen without any further delay.
All right, gentlemen, let me close this discussion quickly by asking you for when you expect the numbers in that sense to come back to normal. Naishad, what's your sense that if this pace of inquiries continues, by when will we be able to restore ourselves to normal export growth?
I would say it's a guess, but I would say another 4 to 6 months.
Mr. Saktivel, 4 to 6 months for the export industry to come back to any sense of normalcy if this pace of inquiry and orders?
Yes, we are already in mid of August. When we start giving the prices, maybe these orders will be these queries to convert into orders, and our shipment can take place from end December onwards. So we can expect some improvement from end of December onwards.
End of December onwards. Thank you very much, Mr. Saktivel. Thank you very much, Naishad, for joining us on Your World at 10. Well, that's a positive comment coming in from the export industry, that things seem to be changing. At least the number of inquiries has gone up, and there seems to be a stabilization in the decline in Western economies such as Europe and America. So that is positive. We need to take a quick break. We'll come back with all the national and political news headlines.